So let's take a closer look at this GBPJPY. And here on the daily time frame, when I look at this GBPJPY, what I want to focus much more on is what is it that defines a quality trade, right? So here on the daily, I have identified my lows of the market, and I have identified the highs of the market, right? And even if the market was still around these areas right here, I would have used this level right here as my highs, right? I would have used these areas as my highs, right? Now you can see that the market pushed through to break above these highs right here, right? But if I can go to the weekly time frame, we will see clearly that the market had just created a fake out right here on these levels, right? So the market pushed through to break above these levels only to fake out this breakout, right? So the market pushed through only to come back and to continue moving to the downside. So if I can just go back onto the daily time frame, we will see that right there at the edge of this market, right here on the highs of this market right here, the market had indicated change in market direction, right? And that change of market direction was presented by this candlestick right here. So we call this candlestick a pin bar. So a pin bar, if it is presented at the edge of the structure, it means that the market is about to change its direction, right? Meaning to say that now that the market had indicated that it's gonna change direction, we just wait and see what the market does next, right? So after that candlestick pattern, the market pushed through to the downside again, right? Now that area is no longer my area of value. I will now use that area as an area of value, right? So moving forward, the market did what it had to do. The market pushed all the way to the downside. Now remember, as I always say, if the market pushes impulsively, or if whenever you see a strong movement in the market without the market resting, the market will form some sort of a correction, and that correction will be in a form of a structure, and that structure being the higher highs and the higher lows, right? So the market had presented us with that 1 2 3 formation, that being our first touch, our second touch, and then our third touch, right? And that being our first touch, second touch, and then our third touch, right? Now what we want to focus much more is to be involved at the edge of the structure. Always make sure that if you want to get involved in the trade, be involved at the edge of the structure, right? So what is it that defines a quality trade? What defines a quality trade is that if you are taking a trade, that trade is a low risk entry trade, or that trade is just giving you a low risk, that means that trade is a high quality trade, right? But if that trade is just giving you a high risk trade, if that trade is a high risk trade, or that trade is just giving you a high risk in losses, that trade is just a low quality trade, you know. So what we want to do is to get involved at the edge of the structure, the edge of the structure being the third touch of that structure, and our take profit being the 90% of that structure, right? The 90% of the structure being that area where the structure started formulating. But because we have other areas that we might look at when we look at our left side of the market, because we use past data to predict the next move in the market, we also have this area right here. We have this area right here, right? So we would have just pushed through to the downside with this trade until we could have made about 5.4% on this trade, and our profit would have been based on what we have on this left side of the market, right? So moving forward, now we have this bigger correction, right? Now remember, as I always say, every time you see the market pushes impulsively, or every time you see a strong movement in the market without the market resting, the market will create some sort of a correction or some sort of a structure, and that structure being the higher highs or the higher lows, right? Now, the bigger the movement in the market, the bigger the correction, right? So now if I can just take my bars pattern from this level right here to this level right here, this is what we use to predict where the market is more likely to turn, right? So look at this market movement, right? I took this market movement from where? From this level until this level, right? So I'm just gonna take that market movement and place it around here. Now you can see that this whole move right here, you can see that this whole move right here is equal to this move right here, right? So as I said before, our take profit would have been at this area, right? So you can see where this thing ended, right? So let's move forward. Let's look at this current market structure that we have. I can just take this market movement right here up until this level right here. So we expect this move again from this level until this level, right? So if we want to get involved at this in this market structure, we want to get involved at the edge of the structure, right? So if we want to get involved at the edge of the structure, we must wait for the market to do what it needs to do so that we get involved with low risk, right? So that is what defines a quality trade. If a trade is giving you low risk, it means that trade is a quality trade. But if that trade is giving you high risk, that trade is a low quality trade. So what we want to do is to get involved at the edge of the structure being that third touch of the structure, and our take profit being that 90% rule of the structure right there, right? But now that we can see that there was this rejection right here, right? There was this rejection right here. If you can see that this rejection right here, there is a high probability that the market must fill that area, right? There is a high chance that the market will fill that area. Why? Because the market had moved from support to resistance, and from resistance we are coming back to support, right? And from support we might just move back to resistance if the market does not break below these areas, right? So that is what I am looking for in the market. So during my previous analysis of this GBPJPY, if you watched my previous video on this GBPJPY, I believe that the market was still around these areas right here, right? And I did anticipate the market to move exactly how it moved. So during my previous analysis, I didn't have this trend right here, right? Because I only had spotted first touch of the upper trend line and the second touch of the upper trend line. Now, because I have spotted my second touch of the upper trend line, it means that if the market is moving to the downside, the market is moving to the downside only to give me my second touch of the lower trend line, so that it turns back to give us that third touch of the upper trend line, right? So now, because I have spotted the first touch and the second touch of the upper trend line, it means now that if the market is moving to the downside after giving me the second touch of the upper trend line, the market is moving to the downside to give me that second touch of the lower trend line. Meaning to say, at the lower level of the market, I did not have my second touch of the trend line, right? So now I had to predict where the market might give us that 10, or where the market might just give us that second touch of the trend line. So how I did that was that I spotted a channel right here, that being my first touch, that being my second touch, and that being my third touch, which has been broken by the market, right? So we can see that that was a proper structure right there. The market had given us that proper structure. So if the market breaks out of the structure, the market must come back to that 90% of the structure, right? So that is how I predicted that the market might just turn from this level right here, because that is the 90% rule of this inside structure. So that is how I predicted that maybe the market will just give us a 10 at this level, and that is what the market did exactly, right? So now that we have gone back up, we expect the market to give us that third touch of the upper trend line. That is where we want to get involved, and that would be the low risk entry. And low risk entry means high quality trade, and we are just coming to the downside until the 90% of this structure, which is about 7% of profit, and maybe to continue holding it up until these areas right here, because it is more likely that the market must fill this whole candlestick rejection right here, right? That candlestick rejection being this, from this area up until these areas right here. So that is what I expect from this GBPJPY.